The real estate market is a hot topic right now. Should you buy a home now? Should you wait? There are valid arguments on both sides. What we want to do is look at the predictions and the changes we've seen so far this year and help find out what is possibly the best thing to do. This is the market update for April.
I need a house in the hills that come with a deck and a grill. So all of my niggas say we been cooking for real. I gotta get back to the real. We gotta get back to the field. The straw my people is looking up still. Said I need a house in the hills that come with a deck and a grill.
Before we get started, be sure to like, subscribe, and hit that little bell over there for a ding when new videos are posted. Let me know in the comments what's going on in your market and topics that you would like to see in future videos. In the last market update in January, we discussed that the interest rates were expected to rise after the next Fed meeting and that home prices are likely to keep rising as well. The Fed actually met in March, and as predicted, the interest rate did get a nice bump upwards. As of March 16th, the rate was moved from an average of a 4.16 to an average of a 4.42. This, of course, is on a 30-year fixed rate mortgage. This is the most common mortgage by most buyers. This is a little over a 0.25% over the prior week average, and about a 1.2% rate increase over the rate we had at the start of the year. All in all, this rate increase has seen the average homeowner find their mortgage increasing about $250 a month just based off the increase in interest, not even counting the increase in purchase price. Now let's put this all in perspective. A lot of discussion is based around the purchase price, if it will increase or if it will decrease. An increase or decrease in purchase price of about $10,000 will actually only cause a change in your mortgage of about $50. Now let's look at where we're possibly going in the future. After speaking with a few lenders, the interest rate has seemed to be stabilized around the 4.42 mark. The next meeting of the Fed is on May 3rd and May 4th. The Fed is expected again to give the interest rate a bump up, or at worst leave it as is, depending on how the national lending market performs between now and May 3rd and 4th. And this is covering not only mortgages, but also auto loans, personal loans, business loans, or any kind of lending. Let's discuss foreclosures. This is one of the hottest topics when it comes to the real estate market and what's going on. In March, we actually did have an uptick in the number of foreclosures, but I do want to be clear that this uptick is still way below the monthly average of pre-COVID foreclosure numbers. And it's not in the same hemisphere as numbers that point to a crash. We have to remember that banks have not been able to foreclose on homes for almost 2 years, and they have just begun doing so. An increase in foreclosures from the basically non-existent amount of foreclosures months ago is expected. But with home prices still rising, it's likely that most of the potential foreclosures will have equity in their home and be able to sell on the market and pay off their debts before their home is foreclosed on. And now we also have to think about how the foreclosures will be purchased as well. As we are seeing with normal sales, cash is king. It's very likely this will be even more so important when it comes to the foreclosure market, as Wall Street and cash investors are buying homes in bulk. So if you're planning on purchasing with a loan, I wouldn't bank on being able to purchase a foreclosed home with a loan, since typically they'll go to auction first and then the open market if they don't sell. It's very likely that not many of these houses will hit the open market to be able to be purchased with a loan after going to auction. While nothing is guaranteed, a crash coming seems very unlikely. And on basic general level, for the crash to happen, we would have to hit a point of where homes are no longer receiving multiple offers. And the one way is that the inventory of homes available has to be more than the demand of buyers who want to buy homes. And that would end us up in a thing called a buyer's market. We can reach a buyer's market one of two ways. One, the market has to be just pushed and flooded with a lot of new construction and homes that are being listed. Other way we're able to reach a buyer's market is for the numbers of buyers to drastically decrease. This would happen if the interest rate rises at a point to where many buyers are being pushed out of being able to purchase a home. If this does happen, it will make homes much more expensive at lower prices. And when I say expensive, I'm talking about what I like to call real money. And when I say real money, I'm talking about the actual dollar amount you're spending out of your pocket to purchase a home. Remember, the purchase price is only half of what you're paying for the house. The other half is interest. Combining the purchase price and interest will give you the actual amount you're paying out of your pocket over the term of the loan. And this is what I like to call the real money cost of buying a home. The market still shows signs of getting more expensive, and the signs of getting cheaper are not yet here yet. The purchase prices may go down, but more than likely they only are balanced out and stabilize where they're at when the Fed raises rates in the future. And that really depends on how high they raise rates as well. All in all, it still brings us to likely the market being more expensive to buy a home the longer you wait. Homes are currently more expensive now than they were in July or June of last year. And we're not at the summer yet. We're still in what is typically known as a slow period in real estate. As we head in the hot market time of summer this year, I can only expect that more buyers will be in there. Of course, more homes will be available as well. But the number of buyers who are entering the market when schools gets out, and that's when the market normally picks up, will likely be way more than homes available again as we see higher interest rates and purchase prices continue to grow. Now, the information we have discussed is based on national averages and what I'm seeing in my local market of Memphis. And my market here is very in line with the national market. Let me know what you think in the comments, and let me know what you predict as well and what you're seeing in the places that you live. All markets aren't the same, but most of the big markets go in line with how it is nationally. As always, be sure to like and subscribe, hit that little bell for a little ding when new videos are posted. And until next time, I'm out.
I need a house in the hills that come with a deck and a grill. So all of my niggas we been cooking up for real. I gotta get back to the real. We gotta get back to the field. This all my people is looking up still. Said I need a house in the hills that come with a deck and a grill.